Tesla slashing prices again in China. The move by the automaker sparking concerns of fueling the bruising EV price war. Meanwhile, Goldman Sachs recommends Toyota Motor, given the company's strong EV potential amid the competitive market. But let's focus in on Tesla and what is going on there. We already, of course, have seen a lot of back and forth price cuts in China, sparked initially by Tesla. It looks like that they are cutting the priciest models of their various vehicles. Their long-range and performance versions of the Model Y are being cut, according to its Weibo account.
Tesla has just made a rather controversial move, and investors have been talking. The automaker lowered the cost of its vehicles in China after repeated price cuts last year and earlier on this year too. Following the recent challenges with inflation as well as production hiccups, Tesla has been on the move to make things better. But the thing is, Tesla is not only trying to rise above these challenges, but also increase car sales and consequently boost its stock valuation. Tesla is inarguably an uncommon company. The EV maker has recorded tremendous growth in the past few years and is still doing incredibly well. But doubts are starting to rise as regards to its demand, particularly after Tesla once again lowered the prices of its cars.
Let's talk about the Tesla story in China, because just when you think that they've settled on prices, basically, Renita, we're once again dealing with stories and adjustments to the price and cuts.
Right, and it's a different response this time than the last time the company cut. This morning, shares are lower in the pre-market. It's because they're concerned now about the demand picture. What does it look like if Tesla has to cut the prices in China one more time? And then also, they're saying that, is there another price war on the horizon? It comes after another EV maker cut its prices. Now, there's no word from Tesla whether or not this is actually in response to that. However, it does make one question. So the Model Y long range started this year at $49,400. It's now $41,400, and the Model Y Performance was $55K, now $48,300. Now, Tesla also rolled out about a $1,100 incentive for some Model 3 vehicles, and Zeekr was the vehicle maker that cut prices for 3 of its EVs by about $5,000 on average. Now, the base prices there range from around $40,000 to $52,000.
Tesla stock has topped the charts multiple times in the previous months, and there's a lot on the way that could potentially cause the stock price to skyrocket in the near future. For a long time, Tesla has been a long-leading car company, and investors are curious as to how much they can make from investing in the automaker. Although it's never certain, some market factors can help determine just how much a stock can be worth in years to come. Hey guys, welcome back to Tesla Tomorrow. Tesla has been a leading electric car company for years, constantly thrilling the industry with amazing innovations, and more still to come. Despite the various market challenges, the car company has managed to soar above many of its competitors in incredible ways, and its CEO Elon Musk is not holding back in seeing Tesla achieve incredible milestones in the industry. While this latest price cut by Tesla may not be a very interesting move, we believe it was necessary and most definitely falls in line with Tesla's mission. Also, it's not only beneficial for scaling the company's demand, but it can also increase the valuation of its stock. Why do we think so? We'll dive into that in a moment. But before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Instead of worrying about Tesla's price cuts, we think the focus should be on why Tesla is able to reduce its prices quite significantly and whether it is expected to still remain profitable. Here are a few things to note. Tesla has achieved the lowest estimated costs in the EV industry. According to car experts like Sandy Munro, Tesla will still be able to profit from selling electric cars, and those profits will be higher than those of other OEMs. In his opinion, Tesla's cost advantage over other car makers is so high that the move to cut prices is expected to eliminate or even annihilate competition, causing Tesla's cars to be cheaper than other models. Tesla is focused on costs and its ability to produce a cheaper vehicle through various measures, such as using smart ideas like combining multiple functions into a single system, simplifications, taking development and production of some systems in-house, increasing scale, or even changing a business model. The automaker's recent price cuts in China have, in a way, ignited investors' fears, but we do not think this is actually necessary. Tesla has slashed prices several times in the US, China, and other markets since late last year, and increased discounts and other incentives to reduce inventory, as it tries to shield against competition and economic uncertainty. Even Elon Musk has previously hinted that Tesla would cut prices again on electric cars in turbulent times. So why should investors worry? These price cuts will be the basis for Tesla's demand growth. It's no news that Tesla dominates the EV market, especially in countries like the US, where EV makers are still extremely dependent on Tesla's production and deliveries. Although, as new electric vehicles start to hit the market, it could be expected that Tesla will soon lose its hold, but unfortunately that has not been the case. Even though there has been a decline in Tesla's market holding, the automaker is increasing its car delivery volumes to cover up. Tesla has increased its car production and delivery volume not only in the US, but also its markets globally. According to Musk, Tesla has made millions of cars since production started. This company has been on the top gear when it comes to car production, and investors are optimistic that there is more on the way. But you may ask, why is the market demand for these cars? Well, luckily for Tesla, there are recent policies that have been enforced to increase the use of electric cars in certain countries. For example, in the UK, the government some time ago unveiled plans to allow self-driving vehicles on UK roads by 2025. The government had said in the news that allowing this technology could revolutionize public transportation, especially for people who don't drive, and it could also help reduce road collisions caused by human error. They also added that the self-driving industry could make up to 38,000 jobs and be worth $42 billion. This new policy will allow cars, coaches, and lorries with self-driving features to operate on motorways, even though manufacturers of these self-driving vehicles will be liable for a vehicle's actions when it is used in autonomous mode. Similarly, customer-owned Bank Australia announced a self-imposed ban from offering loans for new fossil fuel cars from 2025. The bank revealed this would be done in a bid to encourage more people to buy electric vehicles, adding that the move will help to ensure that its lending practices do not lock its customers into higher carbon emissions and increasingly expensive running costs. It gets even more interesting as the bank's chief impact officer, Sasha Corville, said anyone thinking of buying a new car should consider getting an electric vehicle, considering its impact on climate and its lifetime cost savings. She further explained that there is a need for a quick switch to electric vehicles, citing that the move will bring a greater range of more affordable EVs to Australia. This is indeed good news for Tesla and perhaps other EV companies that can at least try to meet demand. Since Tesla is a leading EV company, it does have a robust market outreach, and the automaker can easily dominate the EV market in these countries. And with more countries opening their roads to EVs, Tesla can increase its market, deliver more cars, and make more revenue. But what do you think about these price cuts? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.